Welcome to Markets Now. I'm Michelle Rook along with Brad Kooima with Kooima Varilek, and we're seeing some mixed trading, both grain and livestock futures trade this morning. But right now, cattle to the plus side, those live cattle futures again scoring new contract highs. And Brad, let's start there because this has been pushed by record cash trade. And so talk a little bit about just how historical this is.
Well, it's been a literal explosion here the last 2 weeks of cash cattle prices. It's happened, I would dare to say that I think I've been as friendly as anyone. You and I have talked on your show about what we thought was a very clear signal that the supply of cattle in the north was much, much less than normal. We were pulled ahead on our yearling crop, and because of the severe weather, our calves aren't anywhere near ready that you typically might have in April, and still aren't, by the way. And this tightness of supply, I think, is finally trapped the packer here into he needs inventory. We're going to the best demand period of the whole year. The weights indicate how current we are. Do I wish it would go a little slower? Maybe, but I don't get a pick. Futures markets are a little bit characteristic of this, right? They go too low, and then sometimes they go. There's no such thing as too high, but sometimes they get a little ahead of themselves, which some people might argue. But to me, Michelle, the catalyst is that every time this thing rallies lately, it has to be just drugged by the cash market. Used to be the futures would lead things. Now we finally react to, cash cattle are up like $10, $12 the last 2 weeks, and I think are going to be up another 3 to 5 this week. And finally, that seems to be enough that finally you dare to have the speculator dares to buy the front end of the market here a little bit. So it's a cash market.
The show me attitude has been, I'm sure, a bit disappointing for a lot of producers. I guess I'm wondering, in terms of the cash market, this seems to be these record highs coming a little bit earlier than anticipated. We're not even into the tightest supplies yet, Brad. So how much higher could this thing go?
You've got a gift for putting me on the spot. And I'm dumb enough to usually, stick my foot in my mouth. Honestly, I had thought if things were going to fall right, that we could maybe get cash to 180. I think that's a given. I think that'll happen. And probably could happen while you and I are visiting, okay, or more. I think the other thing about the cash that's unique is that the north is going to probably be $5 over the south. If we can take the cash market to the mid 180s on this run, which I think it looks like we're going to, I do appreciate your point about the tightness of supply is not even here yet. The way I would read the tea leaves here, the supply of cattle the first quarter of next year is much tighter than now. I'm making the assumption that there'll be enough moisture that will have heifer retention. So yeah, it could get pretty crazy, but Hogs had a $40 COVID low, and then they tripled in value. Cattle had an $81 COVID low. I don't want to be stupid here, but to say that you can have your turn finally. Look at the orange juice market. There's a lot of markets you could look at here. Look at the lumber market. That when finally the supply chain gets caught up and everything gets back to normal, you get a big rebound. And I guess I don't think we've even really got to that part yet. So for now, watch the slaughter level when the packer starts to try to back that slaughter down, and good luck with that, because you're going to have to retain your workforce while you're doing it. When you finally show that demand is going to slow this thing up, then that's where we'll be at the end of it. I don't think we've even begin that process yet.
Yeah, futures, compare this to 2014, or is that the right year to compare to?
Oh, absolutely. 14 around here is known as the bull market of my career until this one, which I think is going to exceed that one, because we got even more extreme numbers, and you've got a lot bigger demand base now than you did in 14. As long as something doesn't happen to mess up the demand thing, and then, of course, I'm talking about an international event, and then, of course, all eyes are on China and Taiwan, right? Hopefully nothing happens there. Hopefully cooler heads prevail. But, those kind of events can change everything. But from a supply standpoint, moving forward toward the end of this year into the first quarter of next year, there's going to be those that'll have to go without. We'll do like we did in 14, where the packer has to cut back to 32 hours a week and stuff like that. That's just what it is. So yeah, the challenge is how do you manage this if you're a cattle feeder? Feeder cattle cost extremely high,
Right.
Also near record prices. So there's risk.
Yeah. What is the break even right now? Because we talked 165 on fed cattle wasn't enough a couple weeks ago, and that's why the feedlots dug in their heels here.
Right. Yeah, that's a good question. It really depends on how bad the weather's been to you this winter. I'm still seeing cost of gains in some places 145 to 155, and cattle that didn't perform at all, maybe even worse than that. I would guess that up in this 175 to 177 range like we got last week, those cattle ought to make a little bit of money. These new cattle that we're buying, some of these bigger kind of cattle, wow, unless this corn changes a lot, you're talking about turning right around and buying a break even someplace north of 170. Next December cattle at 170, 150. So cattle feeders were our own worst enemies, aren't we? The cost of gain is going to be a big predominant factor in that, of course.
Just quick, choice boxes approaching the $300 level here, not too far away from it. Is there any concern about a price that will be sticker shock for the consumer?
I think that's a great question, and I wish I had a great answer. At this point, we don't see any indications yet. Note that the packer has the ability to price boxes where he wants to, and we'll see where the pushback is. This time of year, I would be surprised, especially after a really long winter like this. But as we start to get to better weather, grilling season, Mother's Day, et cetera, et cetera. To me, it would be an after Father's Day deal, but keep an eye on it. Don't forget that the packer was polite enough to take boxes to 475 in May of 2020. So, we got a little room to go before we get there.
Hog market going the opposite direction once again. We scored new contract lows in the June, kind of bounced off that level, but it doesn't seem like we get much traction. How much of this is just, funds keep selling? I understand they're near record short here, but how much of it is just like we talked, money flow, maybe spreads with cattle versus fundamentals?
Well, like my partner Joe likes to say, he's kind of our hog guy. He said he likes to say if the news gets any better, we might go down the limit, which seems to be the nature of the hogs, right? The fundamental news isn't too bad. Average weight's down a couple pounds last week. Exports really good last week. But you're right. The market is dominated by this record fund short position. And remember now, a fund does not know the difference between a barrow and a gelt. He's trading the direction of the market, and when it works, he adds, and when it doesn't, he gets out. So we need the market somehow to turn enough, like I've said before, a paddle big enough to fit there behind. You would think that we would have enough good news now to maybe get there, but I've said that before. Money flow is a problem. You get the feeling that the wrong segment of the market is long, and that the powerful segment, the funds, can still hold the hammer here. But I guess, my goodness, it's the middle of April, and we almost always rally into May, June. So let's hope the seasonality works once in a while.
Yeah, I was going to say the seasonals certainly should start turning here at some point. All right, the corn market, just a quick question. We're going into the report, obviously, here today. But, does it really matter in the context of the fact that cash basis levels are so strong in so many areas, including Northwest Iowa?
In my opinion, it does not. I would be wondering if you were an exchange official, whether or not your market is actually working effectively anymore. And I'm talking about this basis situation. And you can say it's true in the cattle, but it's certainly true in the corn, where this regional imbalance of supply has created a basis situation that, it seems like it doesn't even really hardly relate to where the futures is.
Right.
I don't know that today makes any difference. I say that, and then there'll be some shocking surprise, but I think we kind of know where we're at with ending stocks, or it's going to be tight on beans. I think by next week when we do this, hopefully we'll be talking about planning progress and things like that, rather than these ending stock numbers, which, the weather here is completely flipped. There'll be people even up here in my neck of the woods, I would think, that will be going by Friday. We'll see where that planning progress doesn't start off at a big pace. And if that's the case, then I think new crop, both corn and beans, are vulnerable.
All right. Thanks for joining us. Brad Kooima with Kooima Varilek, and that's Markets Now.